How you doing, friends? Oh, gotta get my blast of caffeine. Nicotine? I haven't blasted nicotine in 30 years. Great. Death Wish coffee. The best. Morning, traders. Coach Ernie here, also known as the dude from Earth. And live at about 8:15 this morning on July 31st. And this is the post FOMC haze. Now, yesterday's presser after the FOMC rate announcement sparked a big drop in the market, but that rebound hit a new all-time high overnight. So it's kind of a classic convexity in action. That's where we position small to harvest big without guessing the twists. So we're already positioned for things like that. We're positioned for the move down as well as the move up. And our members made bank. So with the VIX now around 15.1 or so in zombie land, it's got kind of like a sleepy grip on that now. The real macro story right now is kind of electric. You got Trump's tariffs proving deflationary gold, and Powell's FOMC stubborn on inflation myths, and media rooting for doom. Basically a sick narrative, right? Now let's unpack this and rebound and arm for this upcoming asymmetry. I mean, that's what we're all about, putting on asymmetric trades, small risk, large potential profit. We're not trying to predict where the market's going. We're simply positioning for what could be. And the truth is that the market underprices market moves at least 20% of the time, maybe more. But that 20%, the amount that the market moves over the expected move, is unreal. It's anywhere from 1, 2, maybe even 3 standard deviations. And simply by putting your trades out there, you are, first of all, taking on very little risk. And when those trades hit, like yesterday, both directions, you make huge returns, sometimes 20, 30, or even 50 times the risk that you take. Right? And when you lose super small, and it never hurts. Right? That's basically our mantra. So anyways, this macro drama is kind of pulsing. The FOMC yesterday kept rates steady. This is a big surprise. There were 2 dissenters begging for cuts, but Powell's hawkish vibe on tariffs and his personal vendetta against Trump, I guess, as tariffs as inflation fuel, sent markets dipping initially. And then a rebound roared. Why? It wasn't because of Powell, obviously. It pushed to a new all-time high overnight as Trump's global trade wins just continued to shine. They cooled prices and flipping the script on Fed fears. I don't know how much longer that they can actually go on this tirade. I don't know if it's the entire Fed governorship or if it's just Jerome Powell. But man, it just doesn't make any sense. I am told that my mic is super sensitive today. It seems to be picking up hands on deck. Yeah, either that or there's a microclimate change. Yeah, so I think it's because I turned on the air conditioner. Maybe I can point it away, and you tell me if that makes things any better. So, anyways, back to the script. As I said, Trump's tariffs negotiating is working. It's as simple as that. It's really a genius negotiation at work. Tariffs turning into deflationary tools, deal by deal. Yet the Fed digs in for independence. Is it independence or is it idiocy? That's what I got to wonder. They're completely ignoring the evidence. And still the media's salivating for a collapse, hoping for doomsday, to bash the winds, twisted when wealth's on the line. I just don't get it. So anyways, we're in zombie land at about a VIX of about 15.1. Yeah, that's what it is. With low volatility overnight, all-time high vibes. We're tuning 0 DTE butterflies. We're going narrower. I should go to the charts. Let's go. I don't know. I have no idea when I push this button where we're going. Where are we going? Ah, we did it. We went to the charts. It's the mystery button. All right. So yeah, the VIX is at 15.1. That means that we're much narrower, 20 to 30 wide. I'm opting for a little bit narrower, say 20, 25 wide. I'm usually the guy that's saying, hey, let's go wider. Typically, in years past, I've actually suggested 15, as low as 15 to 25 wide around here, but I've upped that recently. We're also getting into time warp territory. That's where we start favoring a 1 DTE or 2 DTE over the 0 DTE trades, because as volatility is dropping, the rate of decay, of premium decay, is increasing. That means that a lot of the premium that you're trying to collect on a 0 DTE day is actually already decayed on the day before or 2 days before because of that low volatility. I don't know if you had that in your calculation, but that's the effect of low VIX. Accelerated premium decay. That's why we have to go narrower and closer to the money, because options in general cost more in low volatility. Not all options, butterflies, asymmetric positions. So we take our asymmetric positions, we move them closer to the market by narrowing the width, etc. Right? So anyways, getting back to the charts. You want to keep debits of your flies somewhere between 5 and 10%. 10% is our max. Sized kind of like whisper small, you know. You never want to really take much more than 1/4 to 0.5%. I would say actually even going down. If you have a large account, I would say 0.1 to 0.25% of your capital to capture these pre-market moves. So let's go on to the charts a little further. We see that we are definitely above the market. I am no longer with a directional bias of bearish. We have to change that again. Well, we're riding the moving average wave. So when we get above, we're bullish. When we get below, we're bearish. I don't know if it's ever going to get off of that. What we're doing now, it's just in incredible territory. So we're bullish, and let's take a look at the volume profile and the market structure. This is hard to look at because all of this volume up here is brand new, and it's super, super light. So, I mean, we have a node below here, and it's very possible that we could pull back down and find support right on that node. It's hard to see here because I'm not showing the full picture, but I can tell because of the lines, the analysis that I did the other day. That's the bottom of the node, the green line at 6,400 or thereabouts, and the top of it is at 6,430. Our all-time high reached up to, what was that, 46, about 64.68. Wow. So we're getting close, honing in on 6,500 on the E-mini S&P futures. We did fade a little bit once we hit that all-time high. Let's see. This is the European Open right here. So right out of the gate, we were moving. So let's take a look at the NQ. The NQ also hit an all-time high. I haven't even figured that one in yet, but it is just blasted off. I mean, look at this. Look at that rebound from the FOMC minutes. Incredible. So what is the play? The play, well, I would see both fading and going above the market, but zero DTE, like I said, zero DTE is going to be kind of tough. You're going to have to go narrower. If you go the time warp trade, which is the 1 or 2 DTE, you can go much wider, say 25 to 30 wide, and shoot for that 5% debit. So anyways, if FOMC aftershocks or tech earnings ignite volatility, we'll ride this a bit for a quick asymmetry. If tariff triumphs dominate, you might look at further out DTEs. That's when we start moving into something that we call convexity stack, going to 3 to 5 DTE. And I think that's where we're heading right now. The decay of premium has accelerated so much in this move that we need to go a few days out, go a little wider, wait for some existential risk to pop up so that we can capture these. Trying to chase this is just not in the cards for us. So we're going to look at putting things a little further out. Zero DTE trade today, like I said, you might want to focus on that 64.40 level. Let's see, that's right where the top of the, well, a little bit above the top of the node. 64.30 is the top of the node. I think there's a good chance that we come down here and find some support and then maybe consolidate up here for a little bit before we take off. I think the market has to digest all of this and whether or not these tariffs are for real. It's just, you know, Powell said that they haven't made any decision on a rate cut for the September meeting, but I don't see how they get around it. I really don't. I just don't know. I mean, is this going to be his legacy? I have no idea. All right, let's get back to the big head. Come on. There we go. So, to summarize, tariffs are working. FOMC has no idea what they're doing. Hitting all-time highs, lower VIX means accelerated premium decay, means that we need to go. That's what, literally, as we are at all-time highs, our risk increases because volatility is going down. I know that sounds backwards to most of you retail traders, but that's the truth. So what do? We don't try to predict, we position. We go a little bit narrower in the short term. We go a little bit wider in 2-3 days out, and we position those trades and make sure that risk is super, super small. And then, just like yesterday, we wait for that existential event to happen, which it's going to. Happens about 20% of the time. The rest of the time, we're going to take tiny, tiny, tiny dings. That's it. And when that big move happens, we make bank. Again, 30, 40, 50 times our risk. So there you go. That's the plan. I'm sticking to it. This is Coach Ernie. Thank you very much, and I am out.